All right, folks, we are back for the second official market close of 2024. And you know what? I think we need to light up a candle. Okay, we haven't lit up the vanilla chai candle in a long time. I think it's been like a couple months. We need to light up a candle because today's been a tough day in the equity markets. And, it's one of those nights where it's like, well, it's red. It's red, red, red. It's a red day. Now, it hasn't been as red as we thought it would be, but it still is indeed red. So we have to light up the candle just a little bit. Oh, is the candle gone? How's that gone already? What is going? Is it just? It's like the market. It just went away immediately. Anyway, the point is, it is a red day in the markets, and we need to discuss why it's red. If the red is going to continue to stop, the market really hasn't stopped being red since the beginning of the market open. And at least this smell from the vanilla chai candle, it's actually a really good smell. I recommend getting one of these. I don't know where I got it from. I probably didn't buy it, to be honest. My sister probably bought it, but it's a really good smell. I like it. It'll hopefully make us deal with the inevitable market sell-off of 2024 a little bit better. Now, we have FOMC minutes. That's what we got to talk about. That's the main thing that's going to be the discussion of this market close. We're going to get into what the Fed said in these FOMC minutes, why it's so important, really some interesting revelations the Fed put out on these minutes and how they're conceptualizing the path forward. Top headline on the minutes, and we'll get more deeper into them, but top headline from my notes is that the Fed is likely thinking of a rate cut not in March, but in another month that begins with an M, and that is going to be May. So that is the real kind of headline that came out, that May is likely when we're going to see that rate cut, not going to be in March. If it is in March, which 70% of analysts still believe it's going to be in March, then that would be very exciting for markets. But as of now, the Fed, at least in terms of what they said today, does not believe that it's going to be happening in March. So we got a lot to talk about, a lot to discuss. Kane Frost, Meta Mike, Astrokis, Jagger Float, Castorelli, Walter White. Ironic, I've been watching Breaking Bad again. So we got Walter White here. Matt R., Tom Brady, Rock and Ronnie, Davis, Patrick, Tom Brady, Justin, Mark, Lang, Nick Piercy, Lang F. Did you buy any? I bought a little bit of Palantir. I posted that on Twitter. I bought like 25 shares at 1612 or something like that? 1612. So I bought very little amounts of Palantir. That's pretty much all I did today. And nothing else too crazy. This is one of those days where you kind of just, let it happen. Here we got the vanilla chai lighted up, and we got the smell going right here. Sean Fahey, Ricardo, Kaus, Kelly, OMG, I just lit a candle like 5 minutes ago. The other reason we have to light a candle is because I'm so tired of seeing these red candles that I need to see a different color of a candle to reconcile the traumatic experiences I'm having today with the red candles. So exactly. Close the day, Altau. Close the day. See, Kelly, we're on sync. We're both lighting candles. We didn't even talk about that. Davis says, I thought markets thrived in a pause. Why are we excited for a cut now? Well, see, that's the scary part about everything that's going on. I'm happy you bring that up. So let's get into it right now. Let's talk about the Fed FOMC minutes. Thank you all for joining me on the second official market close of this channel. We will look back on this in 2 years, because I'm still going to be doing this in 2 years, because I'm a stock market junkie. I've kind of just accepted it, and I'm going to be having it. I just got to do this. We're going to be looking back on these videos as like, the beginning of the creation of a fucking monster. Okay, FOMC minutes. So what are kind of the core things? These are the things that I wrote down, and these are the things that I think are important to know if you are following what happened with the FOMC minutes. First of all, what are the minutes? The minutes are when the Fed gets together and they basically have a discussion over what they think they're going to do on January 31st, which is when the official meeting happens. That official meeting ultimately determines if there's going to be a rate hike, a rate pause, or a rate cut. Now, I don't think anyone's expecting a cut in January. I don't think anyone's expecting a hike in January. So we're likely going to pause in January, but the market wants to be able to read every syllable that the Fed officials are talking about in regards to projecting what they could be pricing in. Right now, it is pretty obvious the market has priced in about 170 basis points of cuts. The Fed is only guided for 75 basis points of cuts. The Fed said we're going to cut 3 times. The market's like, you're probably going to cut 6 times. And in this note, I think the core thing the Fed wanted to get out, and it's very obvious the Fed wanted to get this out because they've been having their little minions go all over CNBC and Bloomberg and basically say their talking points because they saw the market rallied like 10% in 1 month, and they were like, all right, we need to chill a little bit. Their argument was that we're likely not going to be cutting in March. So the core 4 things from the Fed FOMC meeting that I got or the minutes that I got, was number one, rates can stay at current levels longer than expected. So this was very obvious. We know that rates can stay at current levels longer than expected. Basically saying, look, we're not going to hike, we're not going to cut, but we are going to be not higher for longer, but high for longer. And so, even if we didn't roll up a joint, we are still going to be high for longer. And that means you guys have to get used to that and not just expect that we're going to have a cut. Number two, they say that inflation is likely diminished. This is an actual word verbatim that they have used, called diminished. So they're saying that the inflation is likely diminished and that inflation is coming down. There's some talk in the minutes of a risk of inflation coming back, but at the end of the day, most of them have acknowledged that inflation is falling off a cliff and it's likely going to continue to fall off a cliff. Now, inflation falling off a cliff does not mean that it's a guarantee that the Fed has to cut. It just means they're more likely to cut. The market is pricing in that inflation falling off a cliff and potentially hitting even 2% in 2024. The Fed doesn't think that's happening until the end of 2025. But the market thinks if that happens this year, then there's no way in hell the Fed is going to have this tight of a restrictive policy, because then they're going to induce a recession for no reason, just based on crappy policy at the end of the day. And so the Fed, that's why there's the sort of battle between the Fed and the overall market. And that goes to Davis' comments, which is like, we shouldn't want a rate cut because that means something is broken. Whereas the market's like, well, it doesn't mean something's broken. It just means we were too restrictive to begin with. And that's kind of the paradoxical, I guess, balance that the Fed and the market is trying to deal with. The Fed's like, we should only cut if things are broken. And the market's like, you guys don't really need to cut if things are broken. You guys need to cut because you raised too much in the first place. And Jerome's sitting over here like, you may think I raised so much in the first place. I raised the fastest I've ever raised in 40 years, but inflation is dead for a reason. And it's not because I didn't raise. And so to Jerome's credit, at the end of the day, he believes that he did the right thing here. Now, another thing that was unanimous among the 12 participants in the Fed meeting was that a lower Fed funds rate would be appropriate by the end of the year. So that is unanimous that there will be a rate cut. The question that all of us are trying to figure out is that going to be 3, 6, 9, 12, 15, 18, 21? You see what I'm doing here, counting up by 3. Like, what are going to be the rate cuts ultimately that happen? And so it's unanimous that the Fed believes there's going to be some level of cuts. The question becomes which cut is going to be or how many cuts are going to be happening. And the final thing that I thought was really interesting here is that the Fed said they have the potential to slow down the balance sheet runoff. This is the selling of assets off of their balance sheet, which is quantitative tightening, right? That's more restrictive policy. It's supposed to theoretically reduce inflation and just make the conditions more tighter for the general markets to be able to interact with. And the Fed was talking about, well, maybe we should slow that down. I think right now they're selling off close to $70 billion worth of assets a month. I could be up or down 20 billion on that. I could be wrong on that. But that would be slowing down. And if that's not necessarily quantitative easing. That just means slower quantitative tightening. They're not really printing money yet. They're just like making sure they don't sell it off as much as they were doing it before, which is obviously going to be a good thing for the equity markets, because that means the Fed keeps a higher balance sheet, which adds more liquidity to the markets. So overall, this was not a bearish FOMC meeting minutes report. There were elements of it that were bearish, but it was pretty much in line with what Jerome Powell said in that December meeting, which is that inflation is likely falling down a cliff. We could raise if we want to. We're going to leave the door open, but we all know that they're likely not going to raise. But those 3 cuts are going to happen. The question is it going to be 6 or is it going to be 3, or is it just going to be 1 based on how bad inflation continues to become? Kelly says, hurry, what should I buy before the bell? Well, today's been a pretty red day. I mean, look, if I was going to buy anything today, and I wouldn't do this, so no one do this because I'm saying it, but I mean, I think we all know the obvious stock to buy today. Let me, before I say it, what do you guys think is the obvious stock to buy today? It's not Palantir, in my opinion. It's not Palantir. Let me know what you guys think is the obvious stock to buy today. Oh, wow. Kelly says, fine, I'm buying Palantir. You guys were no help. It's actually not Palantir, in my opinion. Even though Amit Danger in the chat, he bought some Palantir. I did buy some Palantir as well. Yep, she got it. She got it, folks. SOFI. SOFI is the one. Let's talk about SOFI. We got 7 minutes until the market close. Let's discuss a little bit about SOFI, and then we'll get into the full closing bell. Now, and we'll get back to the minutes a little bit after the closing bell, because there's probably some more stuff to talk about on that. But let's talk about SOFI. So SOFI had a pretty ridiculous day. I mean, SOFI, $8.30 right now. This to me is the obvious stock to buy, because, you buy stocks when they're down a lot. I wouldn't be surprised if Kathy Wood puts in a couple 100,000 shares today. I mean, when a stock's down 14% in a day, you buy. Now, there's a lot of people saying, well, wait for $6, wait for $7. Okay, we can keep waiting for that. But like a regular person that DCAs, I think it would be very obvious to DCA at this 830 level. Now, that doesn't mean it can't get back to 7 and 6. That is very, very possible, in my opinion, especially if the macro sell-off continues. So if you want to do a very small DCA, that's fine. I think that's very reasonable. I wouldn't go balls deep at $8.30, especially because things are a little shaky right now. But I mean, this is the stock that's down. I think this is the stock that's down the most today. Yeah, looking at my watch list, this is the most we've got down. I mean, you got even Robinhood 1179. Robinhood's actually held up pretty well today. The Bitcoin miners are down, but they also recovered. We're going to be talking about them in a second. CleanSpark right now CleanSpark's down 2.8%. I mean, I expected down like 15% or something. Granted, Bitcoin did recover a little bit. Bitcoin right now 42,743. We also have to talk about the ETF approval stuff because we have some new news on that. But SoFi is the stock. I mean, SoFi is the stock today if you were going to buy, down 14% on the day. Kind of egregious, but also it's kind of like, did it deserve to run up to 1030? Probably not. And so that's why we're seeing some of the downside momentum here on SoFi as it comes down. I wouldn't be surprised if Noto puts in a buy order. Probably not a lot, but I would imagine that, Noto maybe decides to buy a little bit more. I wouldn't be buying CleanSpark today. PayPal's another one. I mean, look, PayPal. I got the Robinhood notification today. They were like, "Do you want to buy PayPal? It's down 5%." And I was like, "No, I don't want to buy PayPal." I'm so tired of this stock. Like, this is one of those stocks where I'm just so annoyed. My average is 72. At 72, I was like, well, PayPal's it's pretty undervalued. Like, fair value is like at least 95. This is like stupid. And then it just decides to go to 58 and it doesn't recover. That's been the hilarious part. The entire market has recovered. Even if, SoFi's back down to 830, it went back up to 1020, right? It recovered down from those July collapses back up higher. And now it's back to that same sort of September level. PayPal just didn't recover. I think the max we got on PayPal was 63, 64. It's just like a stubborn stock. It's not moving. And it's not a broken company. It's a broken stock, but the company has to execute in order to make it not broken anymore. I think PayPal is a good buy still. I mean, if you're into this for like the next 2 years, I think PayPal is going to have an amazing recovery over the next 18 months, but it's going to have to be built on transaction margins increasing and also management just proving that they can shear the step in the right direction. But PayPal would be another stock. That's not the worst thing to buy. Kelly says PayPal is such a useless stock, such a great business. Yeah, I use PayPal literally every day. So people use PayPal. I think on Black Friday they did like 20 or 30 billion dollars of GMV. Like people buy stuff with PayPal. It's just obviously if someone wants to know in a nutshell why PayPal is down like 40%, it's that payments have become incredibly competitive. And because there's so many ways to buy things with Klarna, with Amazon Pay, with Zelle and Cash App, and to send money, it's also not that easy. By the way, I have something to say about Bitcoin. After I'm going to say my thoughts about that. I'm going to write this down right now because I have a revelation that I had about Bitcoin today, and it's not a positive one. So after the market closes, we're going to talk about that. It actually made me really bearish on Bitcoin today. What I discovered today made me stupidly bearish. Now I'm still going to speculate because I'm a speculator and I need to speculate and get my speculating on. But it made me pretty bearish today for what we saw about Bitcoin. Amit did say he would buy a Palantir when screenshot. I did. I bought 20 shares today, or 25 shares, whatever. It's at like $16.12. I bought 20 shares yesterday, like $16.80. I bought 50 shares in the past 2 days. It's not the big purchase. You guys know the big purchase is waiting for 15 if we ever get there. So I'm being pretty disciplined on that. Maybe I don't get it. I have a friend today. I have a friend who texted me. He has cash secured puts on Palantir that he bought in 2021. That were expiring in January 19th, 2024, which is 16 days away. See the quick math, 19 minus 3, 16. I'm elite. I don't know what to say about that, but 16 days away, you've got these cash secured puts expiring for 11,000 shares. And the strike price was none other than $15. So it's just hilarious to me because he was like 2.5 years ago, I did not think Palantir would be 15 freaking bucks in 2024. But he got a hefty premium. I mean, he got a lot of money. You would imagine, you're putting 11,000 shares on collateral. You're getting a lot of premium in the meantime, and he locked up all that money, 11,000 times $15. So what is that? That's like more than 100,000, obviously. 11,000 times 15. Yeah, it's 165,000 he locked away, okay, for 2.5 years. And he might get that 165,000 back, or he might have to buy 11,000 shares of Palantir at $15. Because it finally gets assigned to him. So it's really hilarious that like Palantir 2.5 years later is still at $15, maybe at $15. We don't know if it'll get there, but if it is, then he'll end up getting those 11,000 shares. So that would be pretty funny. And I thought that was just hilarious to know that is where we are in the state of the markets, especially, you would imagine 2 years ago that the markets would be a lot higher, and they are, but individual stocks have like fallen way back down and then rebounded way back up. Okay, we got about 30 seconds until the the market closes. I don't know the catchphrase yet for when the market closes. Just, I mean, like, I think it's close your asses down. Like, I don't know. Nothing sounds really great. So for now, I'm just going to say shut your asses off, even though that doesn't sound good either. Like, I have no idea. And you guys got to give better comments on what do you think it should be. Because so far, I don't really know what it should be. At least not yet. But we will see. We will see, and we will figure it out. All right, January 3rd, 2024, 4 p.m. Eastern Standard Time. Ladies and gentlemen, the stock market is now closed. Shut your asses off. It's like this horrible attempt at trying to end it. That's the market close. There we go. That's the market close. Okay, so some of you guys said clench your ass yesterday, and I thought that this was hilarious because that should be for the market open, especially on a red day. Like clench your ass cheeks. That's as soon as I ring the bell and the market opens and the whole sky falls down, should be like clench your ass cheeks. The market is open. But that's probably not the most appropriate. Okay, so bunch of things I want to talk about. If you're just joining, we've got the FOMC minutes. We got some Bitcoin news. First, let's just look at where stocks ended. Bank of America red on the day by 1%. Amazon red on the day by 0.97%. Apple red on the day by 0.75%. Apple actually did decent today. I mean, it's down another percent, but at least it's not down 4 or 5% like it was yesterday. Google actually was green today, 0.57%. Meta was red about 0.53%. Nvidia was basically down 1.24% on the day. Pure Storage, we looked at this company yesterday. They were up on the day, 4.87%. Again, some of these value plays getting momentum. Verizon was up on the day, 0.68%. At one point, it was up about 2.3%. Really interesting. Verizon trying to close in on that $40 range while the entire market is red. Why are people going to Verizon? Better yield than some of the things they're probably going to be getting in money market funds. Undervalued, you could argue, just from a fundamental level, and probably more safer than some of these high growth tech names that have run up a lot. Verizon not being one of those names that has run up as much as a company like Amazon, Google, etc. What do we got? Moderna is down 3.48% on the day. Robinhood down 5% on the day. Robinhood was down worse. Robinhood was down almost 8%. It recovered. It was almost at 1190. So Robinhood doing well at 4.69%. I thought it would be worse, but Robinhood definitely took a little bit of beating. Marathon somehow ended positive, up 2.2%. Beto shares ended down 5%. MicroStrategy ended down 7%. QQQ ended below $400, $398, down 1%. TFC ended 2.9% down, 2.69% down. Coinbase ended 2.96% down. I would imagine Coinbase would be down a lot more, but Coinbase recovered throughout the end of the day. And then Riot was down 2.4%. And then CleanSpark as well. CleanSpark really didn't get hit too hard. CleanSpark down 2.85% of the day. The miners actually did a pretty good job, in my opinion, in terms of just maintaining their momentum, because I expected the miners to be in a much worse position. And some of them were. I mean, they were down 12, 15% on the day, and then they just started to recover a little bit later in the afternoon. And that goes to the point around how Bitcoin, quite frankly, recovered pretty nicely. Let's go to Bitcoin right here. This was the interesting thing I was looking at all day. Bitcoin at 42,770. So as you can see right here, Bitcoin went up to 45,800 yesterday, and then it dropped to 42,871 by the end of the day. Then it came all the way down to as you can see right here, 40,648. This was at 7 a.m. So we went from 45,000. This is like within the span of 30 minutes, 45,000 to 40,000. So it lost $5,000, lost 6%, lost all the gains plus more that it got yesterday, which got the markets incredibly excited. This is a nasty downfall. And then it recovered a little bit to that 43,000 level. Then it came right back down. And now we're kind of stuck here at 42,788, trying to get back to that 43,000 level. That is what led to the volatility in the miners and the companies like Robinhood, the brokerages, and the Coinbases not being as that intense as they were when it fell down in the morning to the $40,000 level that we saw earlier in the day. Palantir, let's see where they ended. Palantir ended $16.09, down 2.96% of the day. This one actually was not that bad, to be honest. I thought Palantir was definitely headed to that $15.90 range. It seemed inevitable just given how badly it took a beating before. But Palantir right now at $16.09. Now, look, it's 9 cents away from that $15 Dolores range. I don't know if we get there. But if we do get there, I think a lot of people will be excited to buy. I think there's going to be a lot of support at that $15 level because there's a lot of people ready to buy. I mean, a lot of people, they sold from 15 to 21. So they're waiting to get back in at 15. A lot of people sold from their $17 averages at 21. So I think people would want to get back down to 15. There's also a gap fill at 15 that theoretically could happen as well. And that means, that would be some price action to see on Palantir. But so far, it held up really well at 1609. Volume was 46 million shares exchanged hands on Palantir. Obviously, a very, very liquid stock. So if we get down to that $15 level, it will be there. SoFi, 82 million shares exchanged hands in terms of volume. Right now, $8.33 after hours, down 13.89% of the day. I read a little bit of the report of what the guy said on SoFi. What it kind of concluded, if you look at the report, was that SoFi ran up a little too high, right? So their argument was just like the run up was too much, and they were upset that it ran up that quickly, which, a lot of people are saying that's a stupid reason to sell it off, but I don't think that's the worst reason in the world that the analyst gave. I mean, I know in general it's a little naive to be like, oh, the stock's up too much, he needs to sell off. And like, if you're an analyst, you have to be a little bit more fundamental. But in the context of SoFi, because they're not profitable, because they've got all these kind of core fundamental issues with the business that will be resolved eventually, but aren't resolved yet, I think it does make sense to be like, hey, the stock's run up too much, it should sell off. I mean, same thing with Palantir at $21. I feel like, if you had any sense of understanding valuations, and I'm not the smartest guy when it comes to valuations, I'm trying to get better every day, but at some level, I was like, wait a second, they're barely growing 17% year over year. How can they be worth $50 billion? And the only reason they have any profits is because of treasury income, right? So it's at some level, you understand valuation. You're like, this is just ridiculous. So that analyst had that one point that he made. The other point they made is that when their rates come down, or when the Fed lowers interest rates, SoFi is not going to be able to pay out the type of APYs that they're giving right now. And that's going to hurt their customer acquisition costs. So essentially, they think fair values can take a hit because newly originated loans will be at a lower APR than the previous loans. Data-driven investing made a really good point. He is someone who follows SoFi very nicely. And his argument here was that you either get higher for longer and 0.1 is possible and 0.2 is not applicable, or you get rate cuts and 0.1 is not applicable, but 0.2 is possible. Meaning if you have rate cuts, then there's going to be a lower APY. There is no scenario where you simultaneously get higher for longer and rate cuts, which I agree with him. Secondly, he says the point about fair values is just bad analysis. It is true that if rates come down, that SoFi will lower the interest rate on the loans they offer. However, loan buyers simultaneously will have lower cost of capital, which is correct, and therefore no longer demand the same higher rates. So it won't matter if those higher rates, essentially saying like people don't need 4.5% APY in their savings account if the cost of capital is lower, because then they can go borrow at lower rates if they wanted to get a personal loan. So he says their assumption is that since they have a high personal loan replacing beta, they'll be forced to reprice lower if the Fed's fund rates comes down, because credit card rates will come down. Their point here is that SoFi has been able to raise interest on their loans faster than the Fed has hiked interest rates because credit card rates are higher. Once again, these analysts ignore the reason why SoFi has pricing power for their personal loans, which is a really good point. And only if you're a real SoFi bull do you understand this argument. They have an ever-growing pool of borrowers to lend to because of rapid membership growth. The root cause for the high beta of SoFi's personal loans is not credit card rates. It is just that they are pulling an ever-large number of customers into the ecosystem, 717,000 as of last quarter. Just as SoFi was able to raise their interest rates faster than the Fed, they will have the ability to lower them slower than the Fed because they are seeing accelerated member growth. All of this is contingent on this report that this analyst put out yesterday not being correct on SoFi's ability to grow top-line revenue, but more importantly, grow member growth, because that's going to fuel deposits, and inevitably, as a byproduct of that will fuel top-line revenue growth as well. So from that perspective, I mean, look, it makes sense that the stock sold off today because it had run up a lot, but doesn't make all the sense in the world for it to go back to $6-7. I don't think so. And that's why I think a DCA on SoFi today is not the worst idea, but definitely brace yourself, because if the market sells off, SoFi can 1000% get back to the $7 levels, especially because you would imagine the shorts doubled down even more today. The short the short float rate is still 14.5%, and that's probably not changing anytime soon, especially given the decline we've seen right now. Okay, so that was some news on SoFi. We'll talk about FOMC minutes in a second. For if you're just joining, the core headline from the minutes is that the Fed wants the first rate cut to happen in May, not March. And as a result of that, that is why the market really didn't fall down today off those minutes. S&P was basically flat when it came out. It went down to like it's down at 468, but it was teetering around that range anyway. The whole idea behind the FOMC minutes was that if we're going to get a rate cut in May and not going to get it in March, that the markets are being incredibly aggressive, like ridiculously aggressive, in terms of pricing in the capacity for the Fed to lower rates, which means that these risk-on assets like a SoFi, like a Palantir, et cetera, like a CleanSpark, right? They need to be re-rated in some capacity if we're not getting rate cuts until May. Now, what could happen in May is we get 75 basis points of a cut. What could happen in May is we get 50 basis points of a cut. We don't know what's going to happen in May, but if we don't get at least 25 basis points in March, then the market would assume that we're going to get a lot in May. And if we only get 25 basis points in May, then the market is likely not going to be excited, and it's going to be a tough 24. This is what the Fed's CME watch tool is still saying. There's a 64% chance that we are going to get a rate cut of 25 basis points in March. So this is right after the FOMC minutes came out. Didn't really change. Markets are thinking, look, we're probably still going to get a cut of some magnitude. If you add in the other 6%, then it's about 70.8%, because markets are thinking we might either get 50 basis points or 25 basis points. Most 64% think it's going to be 25, 6% think it's going to be 50. The rest of the 30% of people think we're not going to get a basis cut. We're not going to get any rate cuts at all. So it's going to be contained. But 70% of analysts believe that the Fed's cutting in March, which is contingent on that January and February CPI being better than what we expected. Can we do a poll? Yeah, of course. Let's do a poll. Let's do a poll on this one. So let's see what you guys are thinking after the FOMC and see what you think. So let's do a poll. First cut. I'm going to do March and May. Look, I want to say March, but my head is telling me it's going to be May. It's not going to be March. It's hard to, I don't know, dude. March is tough. Like I just feel like unless CPI and PPI comes in really nicely in the next 2 months, that it's just not going to be that easy to get those levels that we're looking for. And the market is being a little aggressive right now from that perspective. Will S&P 500 inclusion change the risk factor for Palantir? Kind of. I think if they get into the S&P 500, it's going to be very good. And obviously fund managers are going to have to buy the stock. The question is how much of that run up is going to be sustained. I mean, if you look at Tesla ran up 40% before they got into the S&P 500, and then they sold off, right? Same thing with Lululemon. I think, I don't know what number they peaked at, but they were up like 10 or 15%, and then they sold off. Now they're back to those levels. But S&P 500 is not everything. It's really good because it legitimizes the company to a stronger extent, and it's going to be harder for them to sell off because they're just part of more funds. But I don't think that means that some run up that happens because they get into the S&P 500 means that means the stock is just going to stay at those levels, because obviously things do come back down. Kelly thinks it's going to be May. It's going to be May from Justin Timberlake. Forgive me for not getting that reference, but I think I get that reference. It's from like some song or some movie from Justin Timberlake, but I'm sorry. I don't exactly remember that reference. Okay. 80% of you say it's going to be May. 20% of you think it's going to be March. Anthony says WTF happened today. The Fed said they're likely not going to be cutting rates until May, not March. And that is why we got a red day. Now, I want to also talk about Bitcoin. Let's discuss some of the stuff going on Bitcoin. First, an anecdotal thing I wanted to mention about Bitcoin that really, it rubbed me the wrong way. Okay. So I had to send money to someone today in Nigeria. Okay. Now, before you guys say I'm getting scammed or whatever, it's not a scam. You can get your jokes out, whatever. But I had to send some money today. Okay. And so I sent a test of like $5. I was like, all right, I need to send $5 to this dude in Nigeria. So I go to Coinbase. I get his Bitcoin address, or the string of all these letters. I thought an address was like 15 Clark Road or something. I thought that was the address, but like no, an address is like all these string of letters and numbers. And I'm like, all right, I put the address in, and I send him $5. Okay, send him $5, and Coinbase is like, our fee is going to be $2. I'm like, okay, that's a lot for a $5 send, but whatever. And then the network fee is going to be $18. And I was like, what? I was like, what? I was like, wait, hold on. So for me to send $5 to this dude, I have to pay $18 to a network. And in my head at that moment, I was just like, yeah, we're not doing this. And I texted him. I was like, dude, we got to figure something out, because I'm not going to pay $18 to send you $5. I was like, hold on. This is the dumbest thing ever. That means if I have to send you like a substantial amount of money, even if I have to send you $500, I'm paying more in the network fee to send you the actual payment for the services that I'm supposed to be getting. And at that moment, I was like, okay, so maybe Bitcoin's just something to speculate on, because the utility of this shit is fucking stupid, right? Like, this just makes no fucking sense. $5 means I have to send 18. Like, it just made no sense to me. So it was a big revelation to me, just in terms of why it's not as practical as I thought it was going to be. Now, Mateo says, bro, we talked about this. I beg you to use Solana. I will pitch Solana to the dude. I'm meeting with him again tonight and seeing if I can use Solana. Originally, he wanted to use Tether, USDT. But the problem is, for some reason, it wasn't supported and we couldn't use Tether. So he's like, all right, just use Bitcoin. And then I tried to use Bitcoin, and this network fee was like bank robbery. I was like, this is ridiculous. I'm not going to pay this much money just to send something. By the way, Galileo Financial Technologies just followed me on Twitter. Interesting. I guess someone on their social team is watching the live stream and they saw me talk about SoFi. What's up, Galileo Financial? Can you guys actually get some revenue so we can actually get SoFi a tech valuation? Anyway, no, I appreciate you guys following. So now I need to figure out what else could we use besides Bitcoin, because I'm not paying $18 to send $5. This is ridiculous. This isn't new news. It was new news to me, because for someone to for the first time I sent Bitcoin, this was just astonishing. I was just like, what the hell is this? Why are people so excited for something I have to send $18 to be able to send $5? Remember my bull case on Bitcoin a couple weeks ago on Finance Junkies? I was like, oh, this is unlocking human ingenuity, because this dude in Nigeria that doesn't have PayPal, Venmo, or Cash App or Bank of America, I have something that doesn't have the banks as the intermediaries for me to be able to reward him for the products and services that he's providing me, which means he gets the economic freedom to have prosperity to do what he needs to do in his life. Now, a lot of people said, no, he's just trying to hide his money from the government, from taxes. That's also another argument you guys could say as well. But at the end of the day, I was like, that's kind of a decent thesis to build an exchange like Coinbase on. I mean, that ambition could empower people and recruit pretty good talent. But now that I'm trying to send him the money and I have to pay all this fucking network fees, I'm like, well, this isn't really the dream that I thought of. This is not the dream that I thought was going to be that exciting. So if anyone has anything in the chat of something else I can do to send, let me know. Matic, ADA, PayPal USD, PYUSD, send Doge. It's cheap as hell. Now, look, one of the things that might change is I signed up for Robinhood to be able to send crypto from Robinhood, because maybe that was a Coinbase thing. Maybe I'm wrong. Maybe that's a universal thing about Bitcoin. But I signed up with they have to approve me. Oh, they already approved me. I'm good. Oh, should we try this right now? Let's try this right now. They approved me. I just accept. I signed up like a couple of. Oh no, we still have to do 2-factor authentication. Okay, so maybe we'll wait. No, I can skip this right now. Okay. Okay, so if I want to send, oh no, we do have to do this. Okay, so I'll show you guys this tomorrow. But maybe I'm wrong. Maybe it's Coinbase has a certain fee versus Robinhood, or maybe there's a universal fee that is not contingent upon the exchange I'm using. But because I don't think Coinbase gets that. Coinbase gets a fee, but then there's a network fee. The network fee is detached from Coinbase, correct? Because the network fee is just the Bitcoin network fee that is independent of a Coinbase, of a Robinhood, of an anything, I would imagine. So if that's the problem with Bitcoin, then yeah, we got to use something else. Galileo Technologies just followed Chris too. Okay, cool. Maybe they're following all the SoFi people on Twitter. XRP is almost $0 in fee. I'm gonna write some of these down, because literally tonight I have to find something new that I can, because I'm not using Bitcoin. It's kind of ridiculous. Use Strike. Okay, I don't know what the hell that is, but I'll look it up. Strike. We got Strike, XRP. Okay, some other people are saying Strike. Okay, so we'll use Strike a bit. But does anyone get my point that this is kind of bearish on Bitcoin? Am I crazy for saying this, or is this kind of like bearish that I have to pay $18 to send $5? Like, it kind of feels like a scam. Or am I wrong about this? And it's just like, no, this is just what we have to. Now, I know you have to pay a fee to a bank if you're sending a money transfer. I get that. And maybe that fee is just as much or more. So maybe the banks are also a scam. But so far, it felt like a little ridiculous, quite frankly. It felt a little ridiculous. Mateo says exactly. The network fee isn't related to amount being transacted, just has to do with how much the network is being used. If that's the case, that's a problem with the Bitcoin network in and of itself. And I would imagine that Ethereum or Solana or maybe some other type of network maybe has lower fees. And I'd be willing to, because to me, what matters is the sending of currency that the other person can use, and the currency has to have value. The cost it takes to send that currency has to be at a minimal amount, so that the person accepting it and the person sending it have the freedom to actually reasonably send and have the intersubjective exchange of currencies in order for the value of the currencies to have any meaning, in order to unlock this whole economic freedom that cryptocurrencies are supposed to unlock. But if you charge that much to send it, like, where's the freedom at that point? I mean, that to me is just like, it's like dumb. Okay, Kelly just sent me this screenshot. Let me pull this up. That's hilarious. This is hilarious. So Kelly just tweeted, what did she tweet? She tweeted, what scares you the most? And Mateo responded, he said, amidst saying he's sending $5 in crypto via Coinbase. Oh my God, dude. Carlos is going to hear about this. Yeah, I got something to say to Carlos tonight. I got something to say because this is kind of ridiculous. Dude, like, because he wanted to do Tether, and I was like, okay, let's do Tether, but then Tether wasn't accepted, and then he was like, no, let's do Bitcoin if that's the only thing that works. And then I was at the dentist today, and I was doing it at the dentist right before I was like getting my crown on my teeth, and I was like, all right, let me just send him $5. And right before I was about to press send, it says network fee $18, and I'm like, you've got to be kidding me! Like, you've legitimately got to be insane to think I'm that stupid to send $18 to send $5. Like, how do you have to pay 2.5x the amount to send the money? Like, if it was $5, maybe I understand. If it was hopefully under $5, I would definitely understand. But $18 is just insane. Absolutely insane. So $5 equals $18 in Bitcoin. Yeah, this is stupid. Don't they have PayPal in Nigeria? They don't, apparently. That's what he told me. They don't have, and I looked it up, so I don't think I think they have it in Kenya, but they don't have it in Nigeria. Could be wrong on that, but PayPal doesn't exist there. They don't have JP Morgan, Bank of America, none of that stuff. And again, for the banks don't want to go to those countries because it's not worth it for them to be able to set up all the infrastructure just because they're not going to be able to make that much money. So they stay in other parts of the world, which is why I get why crypto makes a lot of sense in terms of unlocking freedom everywhere. But that's not what the experience I had today. Silent Alert says you're just finding this out now. Yeah, dude, I've never sent crypto before. I've literally never sent Bitcoin. Today was the first day I said, okay, I'm going to send Bitcoin to someone. And then when I saw the network fee, I'm like, this is just stupid. Like who would in their right mind be bullish on paying $18 to send $5? Like, how's that? Now, regardless, I mean, look, Bitcoin is the big daddy when it comes to crypto, and it doesn't matter what other altcoin you're interested in. If Bitcoin goes up, the whole market goes up. If Bitcoin goes down, the whole market goes down. So I'm trying to separate my investment thesis around the nature of cryptocurrencies and Bitcoin being like kind of the big one versus my actual practical experience with it. And maybe that's naive, maybe that's wrong, but so far it seems like these network fees have existed forever, and Bitcoin has been the highest performing asset ever in terms of return. So it seems like people don't care about the network fees, or there's just enough speculation that the network fees don't matter that much. For what it's worth, it could cost $18 to send $1 billion to. I have no idea what that means, Danger. I have absolutely no idea what that means. I mean, if you're saying the network fees go up and down, so eventually that could be the case, that's fine. But as of now, it's too much money, dude. It's way too much money. Amit, you are so far from understanding Bitcoin, it's actually funny in a way. Well, yeah, I am learning to understand Bitcoin a lot more. And as of now, I guess I didn't understand that you have to pay that much money to be able to say. He's saying it's a fixed fee. No, but that's stupid. I mean, if I wanted to send $1,000, I would only pay $13, just as much as if I wanted to send $5. It never changes. Are you sure it never changes? I mean, maybe if the network fee never changes, that's okay, because I'm obviously sending him more than $5. This was just a test. If that's what you're saying, I guess that's not the worst thing in the world. Is that correct? It could cost you 18 to send 5 or $1 billion today. Okay. That actually, okay then. But Jay Schwab, why are you saying network fee changes? That's actually not horrible. That's actually kind of re-rules my thesis. If it's a fixed fee of so theoretically, if I was going to send this guy $1 billion, it would only cost me 18. That's okay. That's actually very reasonable. That's actually pretty reasonable. That's actually not bad. Why don't you guys say that first? You guys didn't say that in the beginning. Philip says freedom isn't free. You'll understand how valuable the block space is. Eventually, you're going to have to use Lightning or something else for small payments. It means that the network fee is not linked to the amount of Bitcoin you're trying to send. So even if you sent $1 billion, that's okay. That's not that bad. Amit, network fee changes based on the network. It's not linked to the amount of Bitcoin you're sending. Oh, so the network fee is based on how many people are using the network at that moment and how much space is available on the blockchain, which determines the amount of fees you have to pay to the network in order to send the money. That's actually not that horrible. It's not that it never changes. It's based on congestion and priority. So it does change. It's not fixed. But if you did it today, it'd be the same. Okay, so then I will retract some of my statements. I will send a strongly worded letter to the market close committee and retract some of my statements. That's actually pretty reasonable. So the network fee is fixed, which means if I was sending $5 or $10,000, Kelly wants me to send her 10,000. Yeah, we're probably not going to do that just to test it. That would be the same fee. That's actually kind of reasonable because I'm sending more than $5 and I'm sending an amount of money that $13 or $15 of a network fee is not actually insane at all. It's actually very reasonable, quite frankly. It would probably be more if I was using a traditional bank. So that's okay. That makes sense. But the fees are based on congestion. So you're saying the fees could change, but they're not changing based upon the amount of principal I'm sending. So you guys should have said that earlier. It took you guys too long to say that. If you guys had said that earlier, I would have understood it. So I blame you guys. This should have said this very earlier, but nonetheless, that's not bad. Network fees are cheaper at night. Okay, so maybe I'll send it at night. That actually makes a lot of sense. I know all of you in the chat are like this fucking idiot right now. Like all of you are just like this fucking guy. Look, this is my journey. I'm trying to figure this thing out. It's so funny because I previewed this segment by saying I'm very bearish on Bitcoin. I've got something mean to say. And then I got my whole rant out. And then it turns out it's actually very bullish. It's not bearish at all. This makes sense. Okay, cool. So having said that, because I'm bullish on Bitcoin again, ETF approval. When the hell is this ETF going to be approved? So Matrixport put out a report today that the Bitcoin ETF is not going to become approved. And we talked about that on the market open. The guy had some perverse incentives. He left the current company he's at. He started his own research firm. He put out this report. So it seemed a little dodgy in terms of what he was doing. A lot of other reports came out later today that the Securities and Exchange Commission has been meeting with potential issuers of these ETFs, even during the busy holiday season, to straighten up the final details, structure the creation and redemption procedure, and guide issuers to incorporate the latest changes into the revised S1 filings, likely meaning that we're going to see some type of an announcement, whether it's an approval or whether it's a delay of an approval or whether it's not an approval, but likely something that's going to happen around Bitcoin pretty soon. We did see that BlackRock is going to be buying $10 billion worth of Bitcoin within the next day or a couple of days because they are granted the seed funding to be able to establish the ETF. The question is just if they're going to get approval in the first place. The SEC has requested that issuers that have authorized their participant agreement describing who will play a key role in creating and redeeming ETF shares available in the coming days. Authorized participants are a central part of the ETF business, but this job will be a particularly tough one with Bitcoin ETF APs needing basic knowledge of digital assets. That means that essentially the SEC is asking a lot more technical questions, not some of these more high-level qualitative, I guess, existential questions about if the ETF should even exist. The question becomes if the approval is ultimately going to happen based on the level of members on the committee. One thing that we talked about on the market open is that 5 of the XYZ number of people on the committee, I'm forgetting the exact number of people, they are Democrats. And apparently the report highlighted the Democrats don't like crypto. I don't know if that's a reason why it won't get approved. I mean, that's kind of a stretch in my opinion, but that is one of the things that the report pointed out today for why it was bad. Noodler88, thank you for the $5 super chat. Really appreciate that. Noodler88, a very, very awesome username. So I love it. So thank you for the $5 super chat. It means a lot. This helped you save face with Carlos. Yo, honestly, thank you guys for that. Because if I had brought this up to Carlos, almighty high and excited, and he just put out the same argument, I would have looked dumb on Finance Junkie. So I can look dumb on the market open because it's the market open. You guys, you and me have a very special relationship. But on Finance Junkies, those guys are like piranhas, bro. You say one bad thing and they're in the chat, they're ready to fucking kill you. So it's better that it's better that I make mistakes right here. Amit, did you say I'm bullish again? I was kidding. I was obviously kidding. I was just making a joke. Nonetheless, Matrixport is a China scam. Yeah, Matrixport, I never heard about it before, but Matrixport, I guess, is some interesting firm today. Mateo says, by the way, just because you pay the fee doesn't mean your transaction will go through. Bull markets had people spend $250 in network fees for transactions that never went through, but that's for another stream. I've heard this argument before, but I would imagine that the network has become more sophisticated over the past couple of years, even the past couple of months, to the point where the level of drop off in terms of like the transactions has become minimal. Now I could be wrong about that, but I would imagine that the thing gets better over time, not worse over time. But I mean, I don't know. Maybe I'm wrong about that. I hope it's gotten better over time. Amit, I'm going to save you a lot of headache and also lots of DD, and just tell you that if you're so concerned about the network fees, just buy XRP. You know, Steven, my good friend, I'm starting a podcast with him. It's going to debut tomorrow. He also is very bullish on Ripple. So it's something to definitely look into. I've not looked into it a lot, but it's something that he's excited about. Let's get an update on AI. Obviously, big tech went down today, and the main reason big tech went down is because the market does not believe that earnings are going to show massive growth. AI this year has to show that growth. So let's get an update on what's going on with AI. NVIDIA doing a stock split. That is news. Let's play this clip, and then I'll bring that up if that's actually happening.
Another week, and probably for many months. It does take us to our talk of the tape, how to play the markets right now as the Santa Claus rally ends and investors position for whatever a new year might bring. Let's ask Josh Brown, CEO and co-founder of Ritholtz Wealth Management. He is with me here at Post 9. All right, so 2 days of red in a row. I said we had some buying of mega caps. You got to believe at some point investors are going to look at declines in those stocks and say enough's enough. Enough is enough. The best stories in the market, and those are the best plays still.
So I agree, and we talked yesterday on the half about just like why are people selling? Obviously, nothing fundamentally changed. People have massive gains in these stocks, especially if they held them through the fourth quarter. And if they did that and they were waiting for an opportunity to take the profit, I'm on the wealth management side, so I already know the way financial advisors think, the way high net worth investors think is, all right, we're going to take 10% off the table, but why would we do it in this fiscal year and owe the taxes in April? Let's push that decision a little. Let's push that tax liability a little bit further out without taking significant risk. This first week of January, after a massive, very sector-specific rally in the market, makes perfect sense to see profit taking. I also think there's a lot of rebalance activity. You combine those two things on the scale of trillions of dollars, that's how you get these stocks start the year looking like they're stumbling, but really fundamentally their businesses are not stumbling.
Let's talk about this a little bit deeper, because Tony Pasquarello of Goldman Sachs, head of hedge fund client coverage on this program a lot, just sent a note out before we came on the air, and it plays right into that story and the question that all of you want answered, right? Because he's thinking the same thing all of us are.
Yeah.
Is mega cap tech a consensus position? Of course. Is that a problem? Not necessarily. Here's what he says, quote, a set of stocks that are very well owned and dearly valued. Okay. Now, I would argue these are the best balance sheets on planet Earth. They are generating and returning an immense amount of capital. They have the most direct leverage to the most attractive new theme. Where I come out, continuing to quote, these stocks are not cheap and they are widely held. So one should be a little choosy on adding length up here. Bigger picture, however, I'm inclined to keep my eye on the ball and would look to add on meaningful dips. Now, 1 day or a day and a half doesn't make a meaningful dip, obviously.
I'm with you.
However, the point is clear. These stocks went up the way they did for a reason, and they're going to remain in favor for a reason.
Look, I happen to think Alphabet and Amazon are two of the best stocks to own for this year. I don't love the valuation. Do I wish they were 10 turns cheaper on PE? Of course I do. But these are the cards in front of us, right? We don't always get to pick. I think these stocks will be very stable this year. I don't know that they'll outperform everything in the way that we saw big cap tech last year outperform everything. But I think they can work because they are two of the biggest beneficiaries of AI. This is the year that AI goes from a concept to an actual product. Microsoft's got an early lead, but I think when you look at the ownership of Anthropic, you look at Amazon now using their own chips to train large language models. You look at Alphabet's opportunity to incorporate these tools into all of their existing products for literally hundreds of millions of people on day one. These are companies that are going to benefit, and I don't think they're so expensive that we have to look past them on a valuation basis. So maybe it's not as great of a setup as it was last year. I still want to be there, but I want to be in other places too. And I think you don't have to choose. You can do both things at once. Energy got off to a great start this year. This is the third worst performing sector last year. This year it's in the lead, XLE plus 3%. There's no reason why that couldn't continue, and actually crude caught a bid today. So there are other things to do. It's not Amazon or energy, in my view. It's Amazon and energy. I think you want to look all over the world, quite frankly. There's a
I think he's correct about this as well. I mean, one of the other reasons, one of the things we were talking about on the market open was that there are so many different opportunities that are starting to open up and become more apparent as we see big tech and large cap tech either be flat or sell off. Because last year was the year of large cap tech. And one of the interesting things about investing is that these narratives have to shift, these ideas have to change, and we have to be constantly innovating in terms of where capital is going to be allocated in order to have a more dynamic thesis on what's going on in the markets. And so while you don't want to be out of the big tech stocks because they are a flight to safety and their earnings can just be phenomenal if AI continues to prove it in the numbers, which I think is going to be the biggest thing going into February, is can AI prove it in the numbers? But if they don't, there are other sectors that are exciting, like the small caps, like regionals, like some of the crypto miners that potentially could have some alpha going in as well. I've never heard Josh Brown say Palantir. I think he's talked about Palantir once or twice, but that's not a name he's ever been super excited for. He's either big cap tech or some more into the fintech world. Palantir's never kind of been on his radar, so it would be interesting to see the day he would say it's on his radar. One, he thinks Robinhood is a good trade right now as well in the context of Bitcoin, so I know that's one thing he's excited on. He did buy Snapchat, which is very interesting. He thinks that bad boy can get to 34. I think that's a little tough. But yeah, he's more into some of the big cap names. I want to talk about the jobs report. We did have some of these JOLTS openings. They came out after the market opened, so we can discuss it now. JOLTS job openings, 8.79 million versus 8.85 million. So we have less jobs open than what we expected. What the market expected before, right? So this jobs report was actually really interesting. I mean, it was not really bullish or bearish. It was kind of in line, even though we thought we would have more jobs open, we have less jobs open. That goes to the point that there's probably going to be some level of unemployment going higher, just because if there's less jobs available for people. But there are still plenty of jobs. There's about 1.4 jobs per every unemployed person in the United States, whereas a couple of months ago that was 1.8. So although that's coming down, there are still enough jobs available for people if they needed a job, which is the good thing about the current report that we have right now. ISM manufacturing PMI in the United States came in at 47.4 versus 47.1. That is a really good thing. That means that manufacturing and the supply chains, logistics, exports, imports, that's increasing. The problem is it's still below 50, and below 50 means you have a little bit more of a contracting economy than an expanding economy. So we're seeing that go higher, which is going in the right direction, even though it's below 50. Now, one thing here, the number of job openings decreased by 62,000 from the previous month to 8.79 million in November 2023, marking the lowest level since March 2021. So since March 2021, we have not had these many jobs or this little amount of jobs open, and it's falling below the consensus of 8.85 million. In summary, the macroeconomic data is still satisfying and aligns with the Goldilocks narrative. And I agree right here. The Goldilocks narrative is that inflation is coming down. Growth is not being killed just because inflation is coming down. And that's a good thing. As long as we have growth continue to accelerate, even if it's not accelerating dramatically, but as long as it's not deaccelerating dramatically, and you've got inflation coming down, we are in a Goldilocks scenario. If we are not in a Goldilocks scenario, that is when inflation is not falling off a cliff, and that's when growth is slowing down, and then we're just in for a whole world of trouble. But so far, we are not in that situation right now. So overall, jobs report today was okay. Now, the 10-year inked a little higher. 10-year was at 3.92%. It's down for the day, but at one point in the morning, back when Bitcoin fell down to about 40,000, you had 10 years at 4%. So we did get to those 4% levels on the 10-year, but it came right back down pretty quickly. Still at 3.92%. Look, it's very close to 4, so it can get back there. It went up 6 basis points, came down 2 basis points by the time the market opened. So still below 4%, which is good, but not necessarily the best as per where the markets want to see it go in order to have continued gains, which is at 3.6, 3.5% level in order for the markets to continue to rally from there. Josh Brown bought Zoom as well. Yeah, he was, Zoom to me I still don't understand the thesis. I mean, let's pull up these equity charts. Let's actually take a look at Zoom and some of these other equities. I have been confused on Zoom forever, and this is Kathy's third largest position. Right now, Zoom 67.17, lost about 2.86% on the day. Yeah, I just don't see what Kathy sees in this one. I mean, again, they're growing also. The problem with Zoom is they're growing like 4% year over year. I mean, it's better than Apple, but at the end of the day, it's not necessarily the best, I would argue. PayPal 58.63. PayPal also fell in the day. That one, we kind of all knew that PayPal was going to be falling down, so we had PayPal fall down. Let's look at the poll real quick. Most of you are saying May. So 69% of you are saying May. 31% of you are saying March for the rate cuts. Davis says Discord will disrupt Zoom. I can't wait to buy into them. Discord is a really interesting one. I think they were rumored to go public at 15 billion, in 2021, but then obviously the market crashed and they were like, let's not do this. Discord, I think, is already disrupting Zoom in terms of the gaming atmosphere and people being able to use it as a video chat platform. I know a lot of people that just call other people on Discord, even though they don't use them on Zoom. I personally pay for Zoom and I use Zoom. It's $15 a month, and I'm willing to pay that $15 because I use Zoom a lot. So it's very easy for me to justify the purchase. Not everyone professionally that I talk to has a Discord account. So that's why it's a little harder for me to be able to get them with Discord. But in general, Discord absolutely is a disruptive company. I don't know if it's necessarily worth investing in. I would have to do a lot more DD, because the problem with Discord is they still make most of their money off ads, right? Discord is still an advertising business, and it's a subscription business on a group chat, but you get like thousands of features for free. So, I mean, there are paid features of the Nitro and the Turbo Boost and that stuff. I just don't know if it's that much to the point where you're going to justify a massive tech multiple on top of it, or how much that can grow. Quite frankly, it's not really like WhatsApp, where the entire world is sending. When we had the World Cup, WhatsApp had 25,000 messages that were sent per second. I mean, it was just like an insane level of usage. So I don't know if Discord is necessarily that, but it definitely is an exciting company in the gaming space. Enphase 122. Enphase was down about 6.5% of the day. Amazon 148 right now. Fell a little bit today, fell about 1%. Nvidia 475. Someone asked if Nvidia can do a stock split. Nvidia did a 4-for-1 split back when they were $800 in October of 2021. So I wouldn't imagine they're doing a stock split again. I think the stock would have to run up to at least 1,000 for them to even consider a stock split. So that's probably not going to happen. But Nvidia, they timed it at the right time when they did that stock split, or else right now they would be $1,600. Then I think it would be a little bit harder for them to get enough liquidity. Robinhood 1180 up 0.08% of the day. Truist is down about 2.67%. SLG was up a little bit. This is a REIT up 0.55%. Arc Innovation 48.45. Kathy also sold 23,000 shares of Robinhood yesterday. She sold a bunch more Coinbase yesterday, and she bought Rocket Labs, which is really interesting. Rocket Labs fell today, and they fell 3.59%. They fell below where they were before they got the $515 million new contract they got last week. So Rocket Labs took a little bit of a dump today, along with the entire market. But it was interesting to see Kathy Wood. I think she bought like $4.3 million worth of it. Rocket Labs, I think, incredibly speculative. You have to really understand the business. Definitely has to be like a 5 to 10 year hold if you really want something meaningful to come from it. But it seems like Kathy's excited for that. And the reason it's a weird purchase is because Kathy doesn't hold for 5 years. I mean, we've unless it's Tesla, she does not hold. I mean, we've pretty much all come to that conclusion. So I can't imagine her actually holding Rocket Labs for that long. But for now, she is buying it. Oh, Rocket Lab. Not Rocket Labs. Sorry about that. Rocket Lab, not Labs. AMD 135, Disney 91, Snapchat 1578, Open Door. Disney had some interesting news about one of the activist investors that came on to their board, Value Act. They were saying something today. Let me try to pull that up, where they were arguing about the different things that were going to change. Disney wins Value Act, Blackwell's backing in boardroom fight with Trian. So I'm going to read through this actually a little bit more. We'll probably talk about it on Finance Junkies, but there's a little bit of an internal dispute going on the board of Disney in regards to some of the activist investors and the other institutional investors that exist. Look, in my opinion, Disney is a really tough investment going into 2024 with all the different undervalued or potentially undervalued assets that still exist, like some of the miners and a Robinhood, and you could argue some of the tech companies that are a bit undervalued. And the reason for that is because Disney either has to sell off ESPN, they either have to figure out a way to monetize their dying cable business, or they have to reaccelerate growth in the parks, or they have to reaccelerate growth in Disney Plus. And they've had a massive leave of subscribers after the whole Elon GFY thing. Not enough to probably put a dent in them, but still enough where it's going to hurt on their next earnings. I don't see any of those things happening. I don't know how they sell ESPN. I don't know in which way they sell ESPN and who they sell ESPN to. Everyone's saying Apple, but is that really going to happen? I don't know. And I don't think Disney Plus is that good. I mean, I've been saying this for a long time. Disney Plus sucks. And so I just don't know how they accelerate massive levels of growth in Disney Plus unless they really bring in a lot better content. I know they have Hulu as well, and they're trying to build one sophisticated app, but Hulu sucks too. I mean, it's not like Hulu's the most interesting, so I don't know exactly how they would be thinking of doing that. But to me, I've always been bearish Disney Plus, and that's why, I've been bearish Disney. Now, granted, the stock has recovered from $79 back in October 2023, so it's up nice from there, but it's down, pretty badly from the 150, 160 level that it was at in early 2023. Celsius was down today as well, down 6%. Celsius was up about 7% yesterday. Celsius now down 6% on the day. Celsius and Hims both fell. Hims was up 9% on the day. Hims right now down 6% as well. So some of the stocks that we saw gain a lot of momentum yesterday, I had no idea why Celsius and Hims were up, but they were up. Quite frankly, I can't invest in Celsius. And it's a little bit of a personal reason I can't invest in Celsius. My like, you know, I don't know. I guess my investment thesis, I'm American. And, you know, like, because I'm American and I'm not anti-American, it's really hard for me to invest in a company that is fundamentally rooted in the metric system. So like the idea of, you know, putting my hard-earned American dollars into Celsius, it just like, it makes me, you know, it's not something I'm comfortable with, quite frankly. And so as a result of that, you know, it's a tough investment thesis for me. But you know, a lot of people say the growth is awesome and the growth is there and the growth is going to continue to be there. It's just the problem is the nature of my American freedom, you know, values. It's difficult. It's really, really difficult for me to justify the purchase. Nonetheless, it is growing. And so if you are excited about this stock that's growing, that's a good thing. Now, one thing I will say, an actual bear case for Celsius, and I don't even know if it's a good bear case. I've said this before, but I don't really know what their brand is. I know what a Red Bull's brand is. I know what Monster's brand is. I don't know what Celsius's brand is. Now, I know they're building this sort of gym-oriented fitness brand, which I get. I don't know if Celsius is the healthiest thing to drink at the gym, quite frankly. An energy drink, I don't care what ingredients they have in it. I don't think an energy drink is what you're supposed to be drinking at the gym. Like, you're supposed to be drinking something that's very simple. It's called agua, water. It's not that complicated. Like, you drink water at the gym. So I don't know if that's going to be their brand moat, but that is something that a lot of people point to. Kelly says Maddox asked for Disney Plus last night, and I'm just like, why? I think Bluey is the only thing that, and YouTube Kids is actually a good gateway to Disney Plus because they have so many of like these random Disney characters that kids get into it. But I can't. I mean, YouTube Kids is so much better than Disney Plus. There's so much better content at the end of the day as well. Disney Plus sucks. Pardon me while I cover my 4-year-old girl's ears, but that's my thing. It's only good for little kids. Like Disney Plus is literally only if you're not a little kid, you're not watching Disney Plus. And like, okay, you're gonna watch the Marvel movies for like a Christmas break. Then what? Right? You're gonna watch The Mandalorian. Then what? There's not an updated stream of content going into Disney Plus. I tried over the Christmas break. I went into Disney Plus and I tried to find something, and I was just like, this is stupid. There's like I'm not watching Avatar again. You know, it's like you can't justify paying something every month for this like nostalgic films. And that was kind of the bull case on Disney. Like, who's watching Snow White and the Beauty and the Beast? Like, no, like people aren't doing that right now. And all the new, you know, quote unquote woke versions that Disney's creating of these films, those are also unwatchable. So at the end of the day, I think Netflix wins here. I mean, I think Netflix, obviously, HBO Max obviously wins here. Netflix right now, $470, up 0.38%. Did pretty well. I mean, Netflix was at $498, so it's retraced, but it's not retraced as badly as some of the other tech stocks. So from that perspective, I think it's a very intuitive thing to say, I don't see Disney Plus growing if they don't have mature adult content for the average adult to actually want to pay for it, because eventually kids grow up, and if your kids grow up, there's no need for you to have Disney Plus. So to me, it's just not been the most exciting. Isn't that the same with Roblox? Yeah, but Roblox has like an actual component to it that is based on technology. Disney Plus is just content, right? Roblox deserves a tech multiple, and they deserve a multiple based on the immersive AR, VR nature of it. It's a totally different atmosphere for why kids come back to that versus Disney Plus. Now, one could argue the bear case to Roblox is that it's only based on kids. I could see that, but they're at least monetizing better than $7 a month for Disney Plus for, you know, just content at the end of the day. Pre-workout energy supplements are big. Yeah, but Celsius isn't a pre-workout energy supplement. Like, it's not like a protein shake or anything, you know? So again, it's a very bad bear case. I'm not saying that's the reason why Celsius is. I'm just saying, like, if Celsius is pitching themselves as the fitness drink, like Red Bull, I don't think people drink Red Bull when they go to the gym. They just drink Red Bull because they want energy. If Celsius is pitching themselves as like the fitness version of energy, I'm just left confuzzled because I'm like, who drinks an energy drink when you're lifting weights? Or maybe that's a thing. Maybe you're supposed to do that. But I would argue if you go to an actual trainer, they would say, no, don't drink energy drinks ever, much less in the gym. Right. So from that perspective, I don't really know if that brand is the best brand in the world. Nonetheless, their growth is amazing. And so that growth is probably going to continue to do well. Like, Davis, do you drink energy drinks in the gym? Davis is a big gym guy. Like, I couldn't imagine you would be okay with drinking energy drinks that are supposed to give us heart attacks at the gym when you're doing lifting and all that type of stuff. Or maybe I'm dead wrong on this and energy drinks are totally fine to drink at the gym. Because if I'm wrong, I guess I'm wrong on that. But I would imagine it's not the best thing to drink at the gym. All right, that is it for me, folks. Please make sure to like the stream. Ultimately, the core thing for today was a Bitcoin ETF disapproval rumor came out. That sent Bitcoin down. That sent the entire market down, along with the fact that the Fed FOMC minutes came out. And those FOMC minutes are highlighting a May cut, not a March cut. And because there's a May cut, not a March cut, that's why markets were really flat. I mean, they fell after that report came out, after the minutes came out, but not to the point where you would get overly bearish. SOFI being down 14% on the day. That's probably the stock that got hit the most, and we'll see tomorrow if it can recover and keep going from there. Amit, what are you talking about? Caffeine is the most studied pre-workout. Okay, I guess maybe I'm wrong. I didn't think people drink energy drinks before they go to the gym. I genuinely, I don't think it's crazy to think that most people probably are like, it's more healthier to assume that you don't drink an energy drink with all the crazy shit energy drinks have in it before you go and lift weights and do cardio. But maybe I'm wrong on that. Maybe I'm wrong. I don't know. I probably wouldn't do that, but I would just drink some water or some Gatorade or something. But I guess energy drinks are valuable in the gym. If it is, then Celsius is going to expand. The gym is going to keep going. Fitness is not going anywhere. And on top of that, Celsius is everywhere. You go to hospitals, you go to just like, I saw someone post a picture of like four like literal shelves of Celsius at their local grocery store, just like filled with Celsius, meaning that there's obviously a lot of demand for more Celsius. Okay, that's it. That's it for me. Thank you everybody for being here. Appreciate you guys. We will see you. We got 2 more streams for the day. My new stream with TJ, where we talk all about options once a week. That is starting 6 p.m. So in an hour, I'll see you there. And then at 8:30, we'll be back for the Palantir deep dive stream. And then we got Finance Junkies at 9 p.m. That's it. Jared says, loving the market close stream. It makes the car ride home from work more enjoyable. I love it. Hope you continue to laugh on your car ride home and get some valuable information about the markets. All right, everybody. That's it. I will see you guys in a little bit. Have a good one. Good night.